Hey guys, this is Beerpreet from TradeandSleep.com. So now we're gonna study what do you mean by charts. Now, before that, I'm just gonna explain you this. What is this in front of me? Now, this is a broker. I mean, you don't need that broker. There is many brokers on the market. I've already explained. If you're in Canada, you can go for Wealthsimple. If you are in USA, you can go for Robinhood. Now, every broker would have interface. It would have a separate interface. Don't get confused. But all the broker would have these things. If you have any another broker, just go on YouTube, find it out what you are looking for. Now in this case, what we are doing, let me explain you. So now every broker would have all the companies listed. Now all these are the company tickers, and every ticker responds to a company. For example, FNKO is a company that responds. FNKO is a ticker that responds to a company called Funko. EXPR is a ticker that responds to a company called Express Inc, UUP, another company, BAH, FAMI, RETO, AAPL, Apple, and so on. There is many companies over here. I mean, you'll have companies in your broker in a different way. Don't get confused. Every broker would have their own interface. So there would be a place where you can type the name of the company. Let's say ZUO. It would give you that company. Now I'm taking an example over here of the company called FNKO. The name of the company is Funko Inc. You don't need to know anything about the company before. I mean, that depends on our strategy. But for example, right now I'm explaining, you don't need that. Okay. Now, what is a chart? How does it look like? Why do we use charts? Guys, firstly, this is a chart. Why it has up and downs? Because the stock would go up, stock would go down depending on the demand and supply that I explained in the previous chapters. Now this is a 3-month chart. As you can see, I can make it 6 months, 1 year, and so on. I'm sure you would have the same in your broker. Now the stock would go up or down. No one can tell. All we do is do an educated guess. Always keep in mind, guys, it's an educated guess at the end of the day. What do we do is we go for different strategies, we go for different indicators, and we finalize that, you know what, yes, according to my valuation, it's going to be good and I'm going to make money. Now, how do we do that? Now, firstly, how do we see charts? So now this is a 3-month chart for a company called Funko, and this is a candlestick chart. Charts could be in any way. For example, this is a line chart of the same company. This is another chart. This is another representation. This is another representation. All we see always is candlestick representation. This is a candlestick representation. Why? Because this is the only chart representation which gives us a clear vision how a chart, how a company looks like. Now I know you don't know anything about why it's green and red, why it has different types of rectangles and stuff. I'm going to explain you. But keep in mind, guys, the first thing you need to know is whether the stock is in uptrend or downtrend or consolidation. Now, what do you mean by uptrend or downtrend or consolidation? Okay, let me explain you. So ignore this. So uptrend, a stock would look something like this. It's higher highs, always a new higher high, and a higher low. So it would be an up ladder, simple. Or a simple way of looking at uptrend is this. Take it this way. So uptrend, the simple way of looking at uptrend is wherever it starts from. Let's say it's a 3-month chart, and a 3-month chart looks like this. So wherever it started, if it's above at the end of 3 months, it's an uptrend. Simple. I know this is an easy thing that I'm explaining, but it becomes hard to a lot of persons to find out whether it's an uptrend or downtrend or consolidation. So let me explain you a simple thing. So from here to here, if I have to explain you, it's an uptrend. Why? On that day, on this day, the stock, whatever the representation is, let's say this is the representation from 8 May to 15 June. The stock started over here, and on 15 June, the stock ended over here. So on this day, the stock went from here to here. It's an up direction, it's an uptrend. Simple. That's a simple way of looking at it. Now what is a downtrend? A downtrend would look something like down ladder. It would be something like this, something down basically. So how you can simply represent it? Let's say it's a 3-month representation. The first candle, I mean the on let's say May, the stock is over here, and June, July, August. On August, the stock went from here to here. So the movement is going down because the price is moving down. So that's why it's a downtrend. Now let's see the real example. Let's say it's a 3-month chart. No, let me explain you another way. Okay, give me 1 second. Okay, from here to here, if I have to explain you, from here to here, it's in downtrend. Why? Because the stock started over here on 9th of June, or I should say 8th of June. You can see the dates and time and the price over here. So 8th of June, the stock started over here. The price was 763. And on this day, the stock went to July 10, the stock went to $5.01. So it's below. At the end of the day, it's downtrend. It's going down. It's a downtrend. But guys, keep in mind, it's never gonna be like it's the downtrend or an uptrend. It's never gonna be like steep down. No, it's always gonna be like up, down, up, down, up, down, up, down. And uptrend is always gonna be like up, 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 and overall up. So it's never gonna. You're never gonna see like exponential curves and stuff like that. But you always see down. It's down, up, it's up. And to see that, you need to have an eye. So in order to have an eye, you need to do a lot of practice. What do? You watch like 50 stocks. You watch like, you do a practice on 100 stocks or 50 stocks, keeping in mind how does it look like. So this chart, if I have to compare from here to here, it's an uptrend. Why? Because the stock was somewhere over here in 6 months, and now it's over here. So the price on this day was $74. Now it's $87. It's up. At the end of the day, it's an uptrend. Now FAMI. Let's see an example of a company called FAMI. Okay, I need to explain you one more trend. There is one more trend called consolidation. A consolidation somehow looks like this. It's also called straight trend or consolidation. It would be somewhere in 2 parallel lines. So this is called consolidation. Okay, let me explain you a better way. So in 2 parallel lines would be consolidation. Actually, let me explain you again because I don't want you to get confused. So let's say a stock would go up, down, up, down, up, down, but in 2 parallel lines. Anyhow, it stays between 2 parallel lines. It's in consolidation. So sorry for my line though, but yeah, you figured it out. I mean, somewhere over here. Yeah, this is the line. So if it's between these 2 lines, it's called consolidation. It's also called straight trend. Now, before you go to next class, your homework is, okay, before I give you the homework, I need to tell you one more thing. Every stock would have all these trends. Now let's say Funko, if I see 3 months, last 3 months, a stock was in consolidation. Stock is in consolidation. Why? Because it's in 2 parallel lines, technically. If I see 6 months, not a clear way to find out, but yeah, it's an uptrend. Why? Because the stock was somewhere over here and now it's over here. So it's an uptrend. Overall, it's an uptrend. So if I have to explain you, let's do the line. So it was somewhere over here and now it's over. Okay, my bad. Okay, my bad. Wait. Okay, so this is a 6 months. It was over here and now it's over here. So now it's over here. So now it's an uptrend. At the end of the day, it's an uptrend. If I go back 1 year, you can see it's a downtrend. So the stock was somewhere over here 1 year ago, and now it's somewhere below over here. So it's a downtrend. So every stock would have all the trends. Now you need to find out two things. You need to find out 10 uptrends, 10 downtrends, and 10 consolidation or 10 straight trends. Let me explain you how does a straight trend look like. So let's say EXPR, it's an example. Let me explain you. So from here to here, if I have to explain you, let me erase all the lines. Okay, from here to here, it was in straight trend. Why? From here to here. Why? Because it's in those two parallel lines. So it was not doing anything. It was just in between those two parallel lines. Okay, my line got... Okay, so now let me explain you. So you can see now. Okay, so it's in these two parallel lines. That's why it's called a straight trend. And now if you see, it's getting down. So it's a downtrend now. So this is how you can see as an example. So now I've explained you three types of trends. One is called uptrend, downtrend, and consolidation. Firstly, you need to find in 10 stocks all these three trends. You need to mark it down. You need to mark down in all in any 10 stocks. In every stock you would find uptrends, downtrends, and consolidation. So in every stock, you need to find out one uptrend, one downtrend, and one consolidation, or one straight trend. This is how we see it. So that's the first homework. For 10 stocks, you need to do the same. 10 different stocks. That is the first homework.